Eric Muathe with Muathe.com. Let's take a look at a chart here for TAC. Now I want to discuss the idea where you find a stock that is breaking out. For example, we have a breakout attempt here on the weekly chart for this instrument, and everything checks out. So you got here a nice breakout in terms of the monthly price moving above the previous monthly closing highs for 2015. You got your monthly RSI probing new highs, which is what you want to see. And we also have a situation where we have one of the MACDs. We only need one. Here we have one of the MACDs moving to 3-year highs. So the stock does meet the minimum requirements in terms of RSI and MACD, not a problem. And keep in mind, add the idea that it is also breaking out in price and it looks like a valid candidate. The problem is, as I discussed here, the idea that the stock just came out from so deep within its base. This is a problem. So let me repeat that. Even though the stock is breaking out here, the issue I have with the stock is something we see sometimes where a stock is trying to break out, but the breakout attempt is coming after a huge spike. In fact, this was a one-day spike, I believe, from Friday, today being Monday, November 28th, 2016. Friday had a 25% jump, and you can see that on a weekly chart. Go back to that 2-year weekly. We can see this is not what you want to see. Generally speaking, you want a stock to be trading or to have traded sideways before a breakout attempt. So what they refer to this is a breakout from deep within your base is not a good sign. And think about it. What the stock is trying to suggest is that it does need to digest the recent gain that's taken place about over the last 2 weeks. And so if you buy the breakout now, what's going to happen is eventually it's going to have higher odds of failing. Remember, they are just odds. So you're looking at possibility of higher odds for failing. Why? Because the stock did not base and have good sideways action before the breakout, right? So you can see if we take this as what was the base, the stock actually broke below and now wants to break out. So that type of action, again, the idea here is breaking out from deep within your base. It's never a good idea. So you want to avoid those types of breakouts. And also take a look here, go back about 5 years on this weekly chart, and you can see actually what might be taking place here, and it's some type of early warning here, is that if you draw the RSI right there, that red line happens to be at about 61.8 on the weekly time frame, and you can see it gives you recent highs, resistance on the red line there with uniform activity rejection for the highs there. We came close here for the highs there. We tagged that same level here for the highs there. And now this movement recently here, let's take a look at this highs, which was this resistance there. And now given the movement of the lows here straight back to test this level, you can see the stock is very easily gonna exhaust itself and is going to roll over. The message here is be on the lookout for breakouts that come from deep within a stock space. Now, as an example, take a look at this action by this instrument that did very well for us earlier this year or mid this year, and take a look at the base. This base was actually getting smaller and smaller, and this is the type of rocket fuel you want. This squeeze, this wedge eventually led to a breakout, and there was nice consistent close tight action. So you want stocks that are breaking out after nice solid very close action. In other words, it's a good rest before they break out, right? And keep in mind that this was a breakout candidate just for the sake of making sure we cover the minimum requirements. You can see here RSI broke out to all-time highs. MACDs also moved to all-time highs, or at least one of the MACDs, and we're talking about this breakout here. You can even consider the subsequent breakout there. Either way, minimum requirements were met. RSI breakout, MACDs moving to all-time highs on both MACD settings, and that was a good base. The idea here is you want to avoid stocks with very deep base breakouts. So that's a good example here. Let's take a look at NVIDIA's, and this is one of the best performing stocks recently. And let's take a look at the monthly. Now this is not, you might think this as being sideways, but it really isn't. But you'll see the stock was basing here for a while, sideways action, pretty much sideways action, and finally it broke out. Now this breakout here, after many months of sideways action, tight sideways action, coincides with this RSI moving above 69.1, or making a move to 3-year highs. MACDs were also making a move to 3-year highs. So we can see the breakout here, for example, after a nice base period, price breakout, RSI moves to 3-year highs or above 69.1. MACDs also move to 3-year highs. So again, just to make sure we have the time frame, it's this time frame here. Minimum requirements are met, price breakout, RSI breakout, MACDs breaking out. And from that tight base, you can see this might be one of the reasons we can say this has been one of the best performing instruments for 2016. Even the subsequent breakouts, for example, this breakout here came after what we can see here to be nice sideways for a period of about 2 months. This is where the stock was trading. Nice sideways action, closing within this range for the month, and finally breaking out. Then there was another breakout, and again the key here is you want tight base, tight constructive sideways action, not erratic or all over the place price action. And again we see here it stayed almost just slightly below the previous monthly closing high. Tight base for 1 month, closed lower, and then bang, broke out again. So this is what you're looking for, tight action. And of course all these breakouts took place with the RSI already trading above 69.1, which is a sign of superiority, sign of strength. And just so we can have it on the video, of course MACDs were moving to all-time highs, if not 3-year highs at the time. So to recap, if you are trying to buy a breakout, if this is your buy point, let's say that's where it closed for the month or for the week, if that was the close and the stock's been basing for a couple of weeks, couple of months, whatever it's been basing, as long as it bases for the minimum required amount of time, the last thing you want to check is how constructive was the base. You'd like tight action within the base and then a breakout. That breakout is valid, as opposed, contrary to something, let's say like this. It closed here but did this, right? This breakout here would not be good because it is not tight constructive action. So when looking for breakouts, the best breakouts are the one where you had tight rest period, nice sideways accumulation. And think of it this way: during the resting period, institutions were accumulating shares, and that's why there was no much movement. It was stable, and once it starts gaining momentum, it's gone. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. E-A-C-S.